Hello everyone. Today we group 9 from the PGDM HR batch 2020 to 2022 would like to present our analysis for the fintech industry. The group members are Anushka, Shambhavi, Shefali and me myself. Firstly, I would like to tell you about the industry and what does it do. Fintech basically is a word of combination of financial technology. It refers to the new technology that aims to improve and automate the delivery and the usage of financial services. Fintech at its most basic level is used to help the organizations, company owners, and individuals better manage their financial operations, procedures, and lives through the use of specialized software and algorithms that run on computers and increasingly smartphones. Up until now, financial services institutions used to offer all this under a single umbrella. The scope of these services encompassed a broad range from traditional banking services to mortgage and traditional services. In its most basic form, fintech unbundles these services into individual offerings. The combination of these streamlined offerings with technology enables fintech companies to be more efficient and cut down on costs associated with each transaction. Some of the most active areas include cryptocurrency, blockchain technology, open banking, cyber security. Presently, the fintech investment in India in 2015 was around 450 billion, and the global fintech investment was around 19.1 billion. Coming to the fintech industry trends in 2021. As you can see on the screen, these are the figures which presently operate in the fintech industry in the 2021 era. Presently, out of three customers, two of them make financial transactions online. 20 billion smart things may become the next banking customers. 500 plus new fintechs are created every year. 2 billion people, unbanked people, could be addressed through mobile. 50 million is sufficient to create a new digital bank. The fintech sector is smokingly hot, investments are ripe, competition is fierce, and the demand is high. Millennials are the driving consumer force, gradually building up their wealth and on track to become the dominant generation in the financial space in 2029. Artificial intelligence, machine learning, and big data analytics are becoming commodity exchange technologies. They are no longer nice to have, but must have to compete. In a nutshell, connected customers want financial products that are simple and intuitive, frictionless, engaging and interactive, able to solve one pressing money matter or better several at once. Now I'll be talking about the SWOT analysis of the fintech industries. Firstly, talking about these trends, fintech industry is highly agile and it offers a clearly differentiated products of basket. Since all the products are unbundled into different categories, it is a very big strength for the financial technical industry to offer them into different individual groups. The fintech offers significant potential to improve efficiencies, reduce costs, modernize financial infrastructure, enable more effective risk management, and expand access to financial services across a range of different areas. Coming to the weaknesses, firstly, there are no use of strategic alliances. All the industry, all the companies under the fintech industry like Paytm, Tide, etc., are working individually and they are not looking forward to any strategic alliances, which makes them weak in front of their competitors. Also, these days, the data privacy of the personal information provided by the customers online is a hot topic. A good example is the Facebook's latest data breach. The danger of fraud or financial risk connected with consumers not completely comprehending new financial products is particularly pertinent for the fintech sector. Coming to the opportunities, despite the fact that numerous central banks are actively promoting fintech through sandbox strategies, banks are able to maintain the status quo due to current regulatory obstacles. Fintech and traditional banking, on the other hand, don't have to compete all the time. They can complement and learn from one another, forging new partnerships for more effective financial service delivery. Also, they can help and develop an innovative culture where multiple products are offered at one platform with the ease to the customer. Coming to the threats, cybercrime has a potential to jeopardize the financial system as a whole. This may be the prime reason why some central banks are hesitant to embrace fintech in a broader sense. Many small and underdeveloped countries in the Commonwealth lack the capacity and the infrastructure to protect their cybersecurity. These are also the concerns that many fintech startups are too focused on launching their product quickly without paying due attention to the security customers. Also, one more threat which comes to this industry is very rapid technological changes. The technology is changing at a very fast pace. which reduces the chances for the new products to be accepted by the customer before they are actually exhausted in the market.
Now, coming on to the Porter's 5 forces analysis of the fintech industry. Number one is threat of substitutes. This is high as there are a lot of sellers within the same industry. The threat of new entrants is also high as there is very little cost involved in setting up a website or an app for these companies. Number three, competitive rivalry. This is very high as there is no switching cost for the customers and thus the players are constantly competing on the basis of price. Number four, bargaining power of buyers. This is low as there are many suppliers in the market and therefore the companies have to have the power to choose their suppliers. Number fifth, bargaining power of suppliers. This is very high as there are many players on the market with similar products and there is almost negligible switching cost. Buyers prefer the company that offers the best price to their customers. Now, coming on to the industry overview. India's fintech companies are all set to become 3 times as valuable in the coming 5 years, reaching a valuation of US dollars 150 to 160 billion by the year 2025, according to a report that details the findings from the study that BCG and FICCI undertook to size the value creation potential and identify imperatives for Indian fintech industry growth. These companies could address a few of the critical structural issues affecting Indian financial services, like increase outreach, improve customer experience, reduce operational friction, and foster adoption and usage of the digital channel. Legacy prone processes and higher operating cost models of incumbent banks and financial service providers will give digital fintech companies an edge as banks play catch up with these more nimble and innovative startups. The opportunity for fintech lies in expanding the market, shaping customer behavior, and affecting long term changes in the financial industry. Indian fintech companies have the potential to reshape the financial services landscape in these 3 ways. Number one, the fintech startups are likely to reduce costs and improve quality of financial services. Not being burdened with legacy operations, IT systems, and expensive physical networks, benefits of leaner operating models can be passed on to the customers. Number two, the fintech industry will develop unique and innovative models of assessing risks. Leveraging big data, machine learning, and alternative data to underwrite credit and develop credit scores for customers with limited credit history will improve the penetration of financial services in the country. Lastly, fintech will create a more diverse, secured, and stable financial services landscape. Fintech companies are less homogeneous than incumbent banks and offer great learning templates to improve both capabilities and culture. Fintech companies can learn and adopt best practices around risk and internal controls, operational excellence, compliance culture, and employee engagement, which have stood the test of time for most of the banks and financial services providers in India. Now, some of the major players in the sector are Paytm, Google Pay, PhonePe, Cred, MobiKwik, etc. We have taken 2 examples, Paytm and MobiKwik. So, firstly, I'll be talking about Paytm, that is Pay Through Mobile. It is India's largest payment, commerce, and e-wallet enterprise. Founded by Vijay Shekhar Sharma in 2010, it is a brand of the parent company 197 Communications Limited. The company, being the first one to identify the need for a low-cost payment method, has been attributed for revolutionizing the digital payment ecosystem in terms of both ease and saving time for customers. With a pool of diverse offerings like Paytm Wallet, Recharge Business, e-commerce vertical, UPI services, and digital gold, the company invests in different kind of marketing support in different life stages of products. The marketing head of Paytm said, as far as the fintech giants competition is concerned, the company is super comfortable with its position in an increasingly competitive payment sector in the country, claimed its president Madhur Deva. According to a Bernstein report, Paytm is building real revenue and is ready to even break even soon, while its competitors continue to spend heavily on cashbacks and incentives to acquire customers. The report said PhonePe and Google Pay continue investing in providing user incentives and spend on marketing at 2.5 to 3 times revenue. Paytm has streamlined its marketing spending from 1.2 times in financial year 17 to zero point 0.4 times in financial year 20 and now stands at just zero point 0.2 times of revenue as of financial year 2021. This is Paytm's product portfolio. So how does Paytm make money? Through Paytm Wallet, we charge business, its e-commerce vertical, which is called the Paytm Mall, and its digital gold. It has also started offering UPI services. On the image on the left, you can see the 10-year transformation of Paytm, where it started with just prepaid recharge mobile numbers, and now it has diversified into multiple offerings for customers across the country.
Greetings to our fellow viewers. Now, I would like to talk about MobiKwik. MobiKwik is one of the largest fintech players, is one of the largest digital fintech players, and is registered as a payment system operator authorized by the RBI in 2007. MobiKwik, the main initiatives by MobiKwik have been namely digital lending offering using artificial intelligence and data analytic capabilities, providing relatively cheaper transfer of wallet balance to bank using credit cards compared to its arch rival Paytm, introduction of unique Mobi score on the lines of Paytm, giving competition to the sole credit ratings CIBIL, expanding operations beyond digital lending, covering retail asset segments, spanning financial planning and offering advisory services in wealth management. As part of its strategic initiatives, MobiKwik is in tie-up with Bajaj Finserv. Initially started offering instant loans up to 5,000, repayable maximum in 3 months. MobiKwik has announced the launch of Boosts, a product that offers instant roll approval and disbursal to MobiKwik users. Being a unique and never heard of type of credit disbursal product, MobiKwik has designed an innovative business model with the help of which loans of up to rupees 60,000 are sanctioned and disbursed in a matter of 90 seconds. What is noteworthy is that TAT, that is the turnaround time, which has become one of the major differentiating factors amongst the players in the financial service sector, has now and has been outperformed by has now witnessed a stellar performance by the originator, that is MobiKwik itself. In order to offer loans under this brand Boost, MobiKwik has associated with a number of NBFCs. MobiKwik is the first wallet player to disburse the loan amount in the user's mobile wallet, initially only available on Android. Boost offer loans without any prerequisite of paperwork or collaterals. The time taken for the whole process has been just 90 seconds. MobiScore, developed by MobiKwik, MobiScore has been regarded as a highly innovative and a convenient measure for the users to sanction loans from up to 5,000 to 60,000. Furthermore, the users who avail these options have the option of transferring the loan amount to the bank account. As per the words of the co-founder, the objective of the company is to provide easy access to credit to every Indian in a manner where location of the applicant does not matter. Being first of its kind product, it will radically revolutionize the way India has access to credit. The proceeds of the loan amount can be utilized towards urgent purchases, travel plans, hotel bookings, medical agencies, as well as payments to offline and online, offline and online. In another initiative, MobiKwik has taken the bold decision to step its shoes in microinsurance by introducing a micro life insurance product in partnership with ICICI Prudential Life Insurance Company. There are options from choosing from 3 product variants of sum assured, that is 1 lakh, 1.5, 2 lakhs against monthly premiums of 20, 30, and 40 respectively. The mutual fund business and these moves have resulted in the mutual fund business of India being benefited as well. As we can see from the initiatives by MobiKwik, it can be seen that MobiKwik is generally now transforming from digital wallet to digital banking. What on its major strategy can be differentiation. That is, it intends to intends to create a high one of its kind products to its consumers, as well as it at the convenience, which is a huge part of the fintech industry. It provides bite-sized insurance products. It also offers bite-size insurance products tailored for the 25 to 40 age group who are first-time buyers. Overall, we can say that the competitive advantages of MobiKwik have been cross-selling, leveraging data science, technology, and efficiently managing risk. As we can see here from the above diagram, there are three types of services which the people can avail. That is pay now, pay later, and cross-selling of the assets across this platform. So hence we can say that MobiKwik has certainly created a niche in its market, and is giving a tough competition till this date.
Hi everyone, I'm going to talk about Cred. We chose this company because in just mere in 3 years, this company has grown a lot. Kunal Shah created Cred in 2018, and the key feature of it is to allow users to make credit card payments through its app and reward them for doing so. So Cred has added later many features in its app, and today by 2021, the company have onboarded more than 5.9 million users and have handled almost 22% of all credit card bill payments in India. Cred offers 5 different products as of April 2021, that is Cred Rent Pay, Cred Cash, Cred Pay, Cred Store, and Cred Travel Store. So all these 5 products, they are being kept under the same umbrella. So we feel that somehow the corporate strategy is going to be vertical integration itself, even though we know that the company is still growing. Apart from that, it has gone through 4 rounds of private fundraising. Cred has received funding from DST Global, Sequoia Capital, Tiger Global, and many others. It's currently valued at 2.2 billion, and it has posted even the losses of 360.31 crores in 2021 in 2020 fiscal year. And that was majorly because it is very heavy on marketing and advertising. However, we feel that this strategy will help it grow over more in the next coming years. The 3 pillars of Cred's business model are the customers who pay credit card bills, the Cred app, and the business who provide offers on the app. So, apart from this, we feel that the business strategy is cost leadership because its focus is to provide services on cheap cost, and also the user experience. If we talk about it wants its customer to have trust in them because all digital payments and fintech companies have this one major issue among the consumers, and that is the fraudulent activities. So the major experience and the major value proposition which company proposes to its consumer is the trust.